Hi everyone, welcome back to my channel. Today I want to talk about my favorite type of setup and the main factors I look for before taking a trade. My trades don't always have to meet all of these requirements, however the more it does meet, the better I feel about that trade. I base my confidence level in a trade off of these factors that we are about to discuss. Before we get started, if you'd like to get a 10% discount for Trade Addicts, don't forget to use my referral link in the description. You'll also find referral links for TradingView and Top Step funded trader programs that will give us both discounts. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. So with all that being said, let's get right into it. The first thing I want to talk about, now I should note that the chart I have here was from July 29th, 2022, which was a phenomenal trading day. And I want to talk about this setup in particular, which actually met all my criteria for a trade. Now, like I said, this isn't always the case. However, in this instance, this was a no-brainer trade for me, and it resulted in pretty significant gains. So let's get into the first thing that I liked about it. So I already played this out a little bit. As of now, it's about 11:15 in the morning in Eastern time, and we can see that we opened up. Now I don't have all the levels plotted on here. I'm just focusing on the ones that we care about for this video. As you can see, we had a bit of a double top here. The day started out, we rejected off of this pre-market level, fell to a level from yesterday, the day prior, so July 28th, 2022, which we'd held beautifully, and then we started moving up. And I actually I did enter in on this position, and I essentially rode it up until about right here where we started seeing these rejections, and this did correspond on the hourly chart with some levels. But like I said, I don't have all of them here because that's not the focus now. So now at this point, we're still in an uptrend. And one thing I want to point out too is that market net flow is very bullish. So we had a bullish cross, and we just released a complete market net flow guide to discuss these concepts further if you're not familiar. But essentially, we had a bullish cross, and despite this double top and calls falling and puts climbing, we're still overall have bullish sentiment. Now, a more aggressive trader could have most certainly taken this trade. I kind of regret not taking it. I mean, this double top was fantastic, and we had these long rejections, so this certainly could have been a good trade. Now, but that's not what I want to focus on. The first thing I want to focus on is this setup. So, number one, we have this level. So the goal is to see if this level is going to hold. And the thing about this level, and this is factor number two, is that if we take Fibonacci and we draw it from the low point to the high point of this big move up, right? So the move really started reversing here. This is just a pivot. So we want to measure the whole move up, which at this point we do know that, okay, that was the whole move up. And the reason I say that is because we had this double top where we failed to move higher. So this is technically a lower high, and we are moving with this low that we're forming right now, which isn't done forming, but it actually blew past this low. So what we're looking for now is for this trade to enter the discount zone, and the discount zone would be anything below 50%. Now, the ideal discount zone is actually somewhere between 61.8% and 78.6%. If we get too far below 78.6%, then we might actually be looking for a reversal of some sort. And essentially, if we started seeing puts crossing calls, then as that happened, then at that point my sentiment would be shifting bearish. But until we break past this zone right here between 61.8 and 78.6, I'm still in a bullish mindset. Now, so that's factor number two, is where we're at with Fibonacci. Are we going to come back down to this level, which corresponds perfectly with like our ideal discount zone? And I call it a discount zone because if you think about where you're buying on this trade, as we pull back, if you're buying anywhere above 50%, technically you're getting less than a 50% discount, right? Because trading, auction market theory is like buying anything else, right? As shoppers, as traders, whatever, we always want to try to get as much of a discount as possible. So if we think about these Fibonacci levels as discount zones, if we buy here, I'm getting a 50% discount. If we buy here, I'm getting a 61.8% discount. If we buy here, I'm getting almost an 80% discount. That's how you can envision it, and that's how okay, I'm getting the best deal possible. So again, the ideal zone would be in between here. So that's factor number two. factor number 3 is, and this corresponds perfectly. Now you can measure this with periodic volume profile, which I've done numerous videos on, or visible range volume profile. Either one is fine. Now, if we look over here on periodic volume profile, right around this level, we have this volume gap. And volume gap indicate areas where we have a lack of buyers or sellers. So it's a common place for price to hold at. So not only does this correspond with a level, but it also corresponds with these volume gaps and also our ideal discount zone. So at this point, I'm thinking, okay, if we get into this area, this volume gap area that's right in this discount zone, right around this level that we saw reject here, and keep in mind, this was once was resistance, we blew past it, now it should act as support in theory. And so if we essentially get into this volume gap area, I'm going to be looking for a hold. The most sensible place for this hold is this level, which is this rejection right here. And let me just slide this up a little bit. So the next thing, and I'll turn off volume profile. So that's number 3. So we're going to be looking for that. But the fourth thing I want to look at is the higher time frames. So if I trade on the 3 minute, so I like looking at the 15 minute and the 1 hour. I do also watch the daily for overall changes in volume, and I also look at open interest and other factors, which I'll do a whole nother video about. But just looking at the 15 minute, we can see, and I check this throughout the day, so we can see that this pivot right here at the start of the day, that first level that we hold, which is right here, dropping to the 15 minute, we can see that's the start of a trend. So what we'd ideally like to see with this trend line is when we get to that point where that level holds in that Fibonacci zone in that volume gap area, are we also going to hold trend, which is another factor, right? Does it fit the overall trend? And as you can see, if we look at the 15 minute and we just zoom out here, the overall trend has been up. We've gone up, made a high. So these were previous highs, which at this point we're still technically in a downtrend until this area breaks. We go up, we pivot, now we made a lower high, and then all of a sudden we make a higher high. We come back, and at a certain point you can see we do actually retest these previous highs, which this is an optimal swing entry if you're someone that likes to swing trades. When you see a market structure break and you see it hold the previous high, that's an optimal entry for a swing trade, because that's essentially confirming that the market structure break, meaning the shift from a downtrend to an uptrend, has now officially changed. And you can get some big wins out of swings off of market structure breaks on the 15-minute chart, especially when you see the market structure break, we make a new high, and then it comes down and holds the previous high. That's optimal entry. So just something I wanted to point out for any swing traders, but that's not what we're focused on here. What we are focused on here is we continued making higher highs and higher lows, higher high. We held a higher low here. This does start to form a trend with 2 points. So now we want to confirm, is the third point going to hold? And this doesn't play as big of a factor with this trade, but you can also see the same thing on the hourly chart, that we're forming this uptrend. Insane deal. Is it going to hold this trend? So now we have higher time frame confirmation. We have Fibonacci, the ideal Fibonacci zone. We have the volume profile, volume gap zones, and we have price levels that we know have acted as strong levels in the past. So right there we have 4 main factors. Then, as mentioned, we have market net flow, which would be our 5th one. Now, this, with market net flow shifting back to bullish here with calls rising, this is called divergence. If you're not sure what that is, please check out the complete market net flow guide. But essentially, we have flow diverging from price, which is a great strategy to play off of, especially when it lines up with these other things that we're talking about. So that's number 5, right? So now we have 5 reasons that we want to enter this trade if we see a hold somewhere in this area. And then lastly, the 6th one would be that the sectors are very bullish. So if we look at the S&P 500 heat map, and there's different ways you can see this. You can actually look at the sector charts. Like you can look at here I have VIX and ADD, but you can also look at the sectors themselves, like XLK, XLV, XLC, all those main sectors in the S&P 500 to confirm that they are indeed in an uptrend and doing and matching what SPY is doing. So however you want to watch that, I use this heat map primarily and market net flow, and then I do check VIX and ADD as well periodically. And essentially, VIX should be going down. If we're in an uptrend on SPY, I want to see VIX in a downtrend. And if we're in an uptrend on SPY, I want to see ADD in an uptrend as well. I want to see ADD matching SPY and VIX doing the opposite of SPY for extra confirmation. So now that is 6 reasons to enter this trade, which is literally, to me, that's a perfect trade. So let's play this out and let's see what happens. And let's see if we get our perfect entry point off of this level, in this volume gap, in this Fibonacci zone, off of this trend line. And so as we fall down here, we keep dropping. Again, this would have been a fantastic counter trend trade. Now we get to the point where we want to see it hold. So that's a good sign right there. When you see that wick form off of that level, that's a great sign. You could either essentially mark it in when the candle completes, or if you're more conservative, as this candle's forming and you start to see a wick here, what will happen oftentimes is it will move up, kind of move down, move back up, right? This is a completed candle, so we can't see exactly how it moved, but you can set a limit order somewhere in here. And then the optimal stop loss entry would be if we see it break past our 78.6 zone. If we see it start to move into these high volume areas, then we want to get out, right? Because at that point, it broke our thesis. It broke out of the Fibonacci zone, it broke out of the volume gap, and chances are it's going to keep moving down, right? So that's why we'd want to set a logical stop loss there, not just base it off some obscure percentages or something, but essentially say, you know, if my thesis is defeated because of the way the price moves through all this stuff that we just talked about, breaks this level, breaks out this Fibonacci zone, breaks this gap, breaks this trend, then I want to get out because I was just wrong. But and then also when we do enter this trade, our initial profit target could either be this high right here, or it could be back to where we were. I'd like to try to hold past this. I mean, I'd probably let a little bit go here as we move through this volume gap, as we move through the 38.2 retracement. But this is such a good hold here, if this works, that I want to squeeze as much out of it as possible. And so I'd be looking to take off most of my position as we approach this double top. But I want to mention that market makers love these double tops because this is a great entry at first, but as price comes back up, a lot of newbie traders will preset limit entries, assuming that it's just going to hold. And market makers love it because they can eat up those entries, create liquidity, force these. So essentially the traders would enter a sell order. They keep pushing price up. The traders then panic and enter buy orders, and it just pushes up the move further. So this would actually be where I'd let go of some of my position, but I'd also want to hold some to see if the market makers are going to use that little dirty tactic to create liquidity and keep pushing it higher. So let's see if all this works out as expected. So you get a little bit of a scare here, but not really, because again, it hits this level and we're still holding this trend, right? These are only wicks that have broken it. This is not a clean break of a candle, and we keep pushing back up, right? And the more wicks we get, the more dojis that form, the more indication we get that indeed this level, this volume zone is holding. So we'll let this play out. And if you trade it today, and right here, I mean, you can see like this offered almost no resistance whatsoever. So even though we do get a little bit of a pivot, it was on lower volume. No reason to get out if we're in positions yet, especially if our main target's up here. And then you could see we dance around here a little bit, but as soon as we come back to that trend line, right, and considering we got in down here, we're well within profits, and you can just essentially keep trailing it up until we have a nice clean break. But as we go higher and higher, we want to be patient. We want to give it time to play out. We're within this big volume zone over here, and of course we're going to struggle with each gap within the volume zone. It's just something to be aware of, but at no point do we even start feeling this 15-minute trend line, and we can just keep holding. And then when you start seeing this bullish momentum and we start getting close to this double top, as mentioned, I do let go of some of my position, but I do hold runners, because especially if we look at market net flow, we get confirmation that this thing is just, the bulls have taken over entirely. If we look at the shorter term expirations, you can see that even more clearly here if we look at the 7-day expiration. So we are dancing around here, and essentially a good rule of thumb would be that if we break that trend line that helped us initially establish this trade, then we could exit our full position. But until that happens, just leave runners. Leave runners. Hold on to them. Let things play out. Take profits as you feel comfortable. Keep trailing your stops so that you don't, obviously, every time we break like a major zone, you just want to make sure that you're sliding your stop up gradually, but you don't want to slide your stop up too aggressively because you don't want to get stopped out early. So you want to make sure that you're keeping it below your trend line, or below each volume gap. So as it breaks through a volume gap and starts moving up, make sure, like, so if we break this volume gap in this area, you can see price comes back into the volume gap to retest and holds and then moves higher. So an optimal place for sliding your stop would be the top of the high volume nodes, not actually in the volume gap, just the bottom of it essentially. But you can see here, I mean, this just resulted in a phenomenal trade. I did let go, close up some of my positions when we hit that previous double top area, which it looks like a lot of people did take profits here. But we just proceeded to just rocket from there. I can actually just cut this here, and it's end of day at this point. I'm always flat by end of day. I don't typically carry positions into the next day unless it was a pre-planned swing play. But yeah, so I mean, that is all of the factors I look for in a trade. And just to review, we want to see a prior level hold. We want to see it within a volume gap. We want to see it within our Fibonacci discount zone, somewhere under basically between 50% and 78.6%. We want to make sure it's with the overall trend on both the 15-minute and ideally even the 1 hour, although it doesn't have to be, but ideally. And they're not always going to be as clean as a trend as this one. This one is actually just a phenomenal trade. It's not always like that, of course, and it doesn't always have to match all of these factors. Honestly, it's the more factors it matches, the more confidence in a trade, but I will still take trades even if it doesn't match every single one of these factors. So the overall trend on a higher time frames, market net flow confirmation, which is huge, and then the sector VIX and ADD confirmation as well, which you can look at sectors directly or heat maps or whatever you prefer. So anyway, that sums it up for this video. If you have any questions or comments, feel free to let me know, and I appreciate you watching.